Hello and welcome to Stf Trading Floor. Once again, this is again another key lesson on after you take a trade. Now it is based on risk and trade management. Mostly on trade management, how do you place your TP, stop losses, and all that. One of the key finite lessons is after that you hit an entry into any trade, the next key thing becomes important is again, how do you manage your trade as it moves? Where is your target? Where is your risk factor? That means your risk reward ratio. How much are you willing to lose? And how much are you willing to get to win if the trade goes in your direction? So these are the key things we are going to check. And one of the key examples that we use is like in my strategy, whereby after I hit an entry, and in this week we had so many entries into the market. And the one of the key things is that we use examples that we were having on our VIP signals this week. And of course, mostly our key thing is on our trade that we're taken this week. One of the key one can be like on gold sell, because it's one that we shared with everyone. Is from the VIP signals, and you can check this trade. Entry was at 9067.71. So after the entry of such a trade, if you check it on the chart, you need to ask yourself, where is now? What is your target? How do I go about my target as a Stf trading flow here? And one of the key things you need to notice that in my case, I've used what we call the average trading range. This key indicator is one of the best one that I have used, is an oscillator, because it measures the daily movement of a daily candle. If you have a daily candle like this one, when it comes to gold, it can be able to indicate on each and every day. You can see it is averaged to 200-day periods. That means for the last 200 candlesticks, at what between the high and the low of a candlestick, how many pips or how many points did it move within a particular day? And you can check like here, it is 22.99. This means is 23 points. Keeps on changing each and every day, but will give you an average of the last 200, so that you can be able to know what is your next target and the stop loss. Because if a trade moves against you over 23 points, then that means that is not your trade anymore. So when I hit an entry, like an example, the entry was at this particular point of 1968 there, I'll calculate 23 points behind. That means from 1968, if it is 23 points, that is 230 pips, I'll go behind 23 points, which will be at 23 point will be at 1992. You can check there at 1992. This should have been my stop loss. Why do I putting it at 1992? Because if this trade moves on an average day, like this entry that we had at this point, if this trade could have gone over 223 pips, that tells you then maybe that trade is changing the direction. Like you can check on this candlestick, it had a very huge upthrust. If there was someone who was selling at such a candle, so at this trade we are picking a buy at this point, that tells you then this trade is not your trade anymore and you should exit. And you can check in such a candlestick, the trade actually changed completely. So this is one of the key points you need to check. Then if I'm winning my trade, then I will take 2 pips so that the risk reward ratio can be 1:2. If I'm losing 1, I should be able to gain 2. That means I'll move down times 2. The ATL value is 23, go to 66. And at 66 here, we have 19, 22, which is 46, sorry there. It should be at 0.46 points. Should be at 0.46. Just trying to calculate the 0.46 is at 1922. 1922 is where I could have picked that just a moment there. So another key thing you need to note is, where is the daily 1 ATL value? If I was to go down from 1968, definitely it should be at 1945, around 1945 price point. Price 1945. And one of the key thing, if you check now, this is how I should have put that trade in this direction. And if you check in my example, if I hit an entry at this price point of 1968, I'll always take 2 trades. I'll always take 2 trades or 3, but the best one you can put is 2 trades for better account management, so that if the stop loss is the same for the two, but the TP number one, I'll put it at 180 value, and you can check the trade that just came and hit 1945, at where you have the 180 value and then drop back down here. Then you break even this trade for just 5 pips, and then you let the other one drop for the 280 number two. But if it hits the 180 value, of course, you can be able, you can exit if you want, because at 180 value, that tells you it's a good drop. It's an average daily candlestick move, and you can check that. That's what actually happens. And then after that, so if every time you are taking my trading signals, number one, you can calculate the ATL value on yourself. That is on gold, and I've been able to demonstrate very well. One ATL value, two ATL value. This year you put both stop losses, TP1, TP2. And that's how you manage your trade quite well. If you have another trade, an example, like this week we had another trade we had was like Audi and ZDD sell. This one we had picked on Monday. Let's see what we had. And the entry was at this price point. Yeah, I remember very well, at this price point on Monday, before just a few minutes before London open here. And if you check this trade at this point, then you go to the daily chart, you check the ATL value is at 62 points. That is the one ATL value. So I'll go back one ATL value and to put my stop loss. So from this price of entry, I'll go back 63 point, which is at 62 point is at an average of 1.0921. 1.0921. Yeah, that point. And then to the TP, it is 62 point times 2, which is 124. 124, we are going all the way to place 124, we are going to place 1.0731. 1.0731, and then the one ATL value you can also calculate from this point to this point, which is 0.62, which is at this point. Yeah, where the price is currently, it is at one ATL value of price 62. And if you go to the H4 chart, you can be able to check this drop. This is the entry, this is the stop loss, TP1, TP2. That's how I always put my TP. But when I'm putting all this in the VIP signals, I'll start from there. I'll only put TPT number 2. But to be a good manager, you need to be able to calculate the ATL value on the daily chart and be able to know how you can go about all this. So that is how you go about all these this trade, and this is the best way you can be able to go about placing your TP and stop losses every time you place an entry, any trade entry. That's how you should be able to do it. And the best thing about it is that when it comes to price hunt, there is no way a broker or anybody can be able to draw a candle here at the top and come and hit your SL, because you know this one is the daily ATL. This what is supposed, the daily candle is supposed to move within a day. So you are very safe. Again, you need to control your risk very well. If again here you are taking away 62 points, that means you need to know very well, if I'm using a 0.01 volume, that is $6. If I'm using a 0.1 volume, that is $62. A volume of one standard lot, that is $620. That means you need to readjust your volumes based on your account sizes. You need to adjust your volume based on your account sizes. So everybody will be asking how we go about this. That's how we go about it. Another case I need to touch on gold, just a little bit for those who we are asking so many queries. So anytime I pick a trade after the breakout and the first candle here, the first entry, I'll ride all this move all the way down, and I will not be able to get into any other trade because I'm checking at these transitions. Like today, our trade of the day is here. This is the trade that we have. This is the trade that we can pick for today. It's a very valid sell at this point. So just calculate the one ATL value on the daily chart. This is the DDUSD sell. You can check the ATL value is at 64 points. So I'll calculate 64 points from this point and see that it's at 64 is at an average of 0.5961, 0.5962 there. And then you calculate the one ATL value once again at 0.64 point is at 0.5827, 0.5827. This is where you should be your initial target. Initial target is there. And then the ATL number 2, which should be at another 64 point, is at an average of 0.5965, 0.59765 there. So this is how you can have this trade. So you can check ATL, TP number 1, TP number 2. So that's how you go about all this. And the best thing is use retro volumes, because you can check our strategy. We are winning over all the trades. Like this week, we only lost one trade, which is USD CHF. All the others, an average of 10 to 15 trades, they are in profit. So every time you are picking our signals, have this in mind. So pick one trade at a time, because we don't trade only gold. For those who are asking about gold, we trade so many signals all across everything that is here. We can trade anything, from indices, from commodities, from metals, from these minor crosses, yen crosses, and the majors. Anything. We trade anything. So be ready to trade everything when you are trading with the Stf trading floor. And from Stf trading floor, that is it. And make sure you, because our trading management is one of the best, and this is the key thing when it comes to trading. Another thing, make sure you are patient with your trade, give it time, because every time you are picking this trade on the H4 chart, one candlestick will take 4 hours. That means you need to wait. 2 candlesticks is 8 hours. So you need to be very patient, and eventually you'll make money. You'll make money with us. That's what we always do here at Stf trading floor. So from here, again, make sure you have the right trading volumes. Do not risk everything in one trade. We have so many other trades that we give throughout the day, and good trade management. Make sure every time your trade hits the one ATL value, cross one trade, break even the other. Break even, you take your stop loss, and close your other trade between 5 to 10 pips, and that is it. Then there your trade plan. This one you can trade, you can cross manually anytime you feel like, based on the maybe economic releases that we're expecting, because fundamental releases are the ones that control the price, and so many other factors. So that depends with you. So that's the part of risk and trade management. It's very important for each and every trader to do that. So from Stf trading floor, that is it. Continue to earn as you learn with us. Thank you.